All right, day two for SpaceX. It is rocking. It is absolutely rocking. So we learned over the weekend, ETFs loaded up. I think like 4 owned it going into the IPO. Now over 40 owned it. Retail obviously loading up. We know that much. And Wall Street also, looking pretty good. I think there are at least 3 buy recommendations on it. In fact, Morgan Stanley, now I know they were part of the underwriters, so people take this with a grain of salt, but they're looking for some pretty positive things from almost 19 billion last year to 160 billion, 300 billion, $3.4 trillion. Of course, not all Wall Street firms are convinced. In fact, some say there's a better way if you want to invest in what's making SpaceX great. Well, Link's equity said, take a look at Nvidia. Well, we're bringing in Bright Lake Wealth Management, their president and founder, Ted Thatcher. And Ted, just the fundamental case for SpaceX, it seems to get better every time I hear it.
Yeah, absolutely. It's interesting. The critiques of SpaceX say, hey, 300 times EBITDA is too much. But the problem with that type of analysis is that it ignores the most important part of that equation, and that being the denominator in that equation, just how fast they're growing. The truth is Goldman, Morgan Stanley are projecting for 2 years out with this IPO, 160 billion in revenue they expect, 110 billion in adjusted EBITDA. And even if they don't hit those metrics, there is still a whole lot of room at the valuation of even a $2 trillion number, which I think is surprised to the upside coming away from yesterday.
Maybe, this is part and parcel of this whole AI trade, this whole fourth industrial revolution, where Wall Street has grappled with keeping up with the speed that these things are happening. And through that lens of looking at return on investments, don't buy these hyperscalers, there's no return on investments, but looking at a very narrow lens instead of a bigger, broader picture.
Yeah, when you click into the valuation and what's driving it and where it's going, we can say, okay, the launch business, let's set that aside. That could be, with Starship, that could even be a call option on the stock. Cursor could be a call option on the stock. What drives the fundamental here, Charles, specifically is, of course, the Starlink connectivity business. That's expected by 2030 to hit $144 billion of revenue. And what I think stands out most to me, actually, is the compute business. Just look at the last 30 days. Right. SpaceX has unseated Oracle in the being in that 4th spot for the hyperscalers.
Yeah, it's so interesting because before I was thinking of it as 3 businesses, but it's really 5, including terrestrial data centers and then orbital space centers. I saw your targets on these things. I'm like, yeah, we got to get this guy in. Because this is pretty aggressive. These are some the mega cap names you said trading at a discount. Let's start with Nvidia, because Nvidia's having trouble breaking out, and yet ultimately you see it really, really making a big move here.
Yeah, Nvidia stands out to me because when I look at the last 10 years, it's actually trading near its lowest multiple in 10 years at about 20 times forward earnings. Their low in the last 10 years is 18. And so, yes, absolutely being the largest company in the world, it's actually an easy one for those hedge fund managers to use puts and kind of bet against when they think about the sector. But ultimately, when that gets re-rated, and I believe that it will over time, that's where I think investors are going to see a lot of upside.
Let's talk about Meta here for a moment, because you have the most aggressive target on this.
Absolutely.
$800 is trading slightly under 600. You like it to 800 over what time frame?
I think you got to give this a little bit of time. I'm looking at a kind of 2 to potentially even 3 years. But other than some of the headlines that they've had to fight, saying, hey, they might go to the marketplace to pull some equity, sell some equity to, build out data centers. That really I see is the only tailwind here. And Jensen has said it. I very much believe it. There is nobody that uses AI to monetize today like Meta.
Microsoft. Before I even get to your target on it, you saw Nadella, this article essentially saying there's a token economy and a human economy, and if companies aren't careful, they're going to lose their business. What do you think? How he's trying to guide this argument?
Yeah, I think it's a really sophisticated take, and I think it makes me ask 2 questions. First, hey, where does the frontier models end up in the value stack long term? And then secondly, I think the thesis basically says if you don't have, proprietary data and IP that you're iterating on to make decisions and absolutely develop your firm, in a world where intelligence is commoditized, you don't have a business for very long.
Yeah, it's amazing. Hey, before I let you go, you like Eli Lilly? And you say there's this sort of an interesting tug of war here going on.
Yeah, I think Eli Lilly, of course, has had a great run-up, so investors should be thoughtful about, entry points and position size here. But in the value creation world for consumers, I like to compare the GLP-1 even to the AI world. And a question that I would like to ask those consumers is, hey, if you have a GLP-1 right now, what would you rather be taking? Would you rather give up maybe your ChatGPT subscription, or would you rather keep that GLP-1? And that says nothing, of course, of the really early innings we are in the development of this technology. Of course, we have GLP-2s and 3s on the horizon as well.
But the bottom line, so what we're hearing about the potential of GLPs goes far beyond what we're using for now.
Yeah.
I mean, a truly, potentially a miracle drug.
Yeah, obviously I'm not a doctor, but you see, of course, the weight loss effects. But then we go to, we see things about cancer being less likely potentially, and all these different types of things.
Ted, good stuff. Really appreciate it.